Okay, good morning. How's everybody doing?
Great, thank you.
That's good. Okay, so today we're going to go over some compliance and processing stuff, and then we'll touch on the tax law changes towards the end. And then after that, if anybody wants to redo the webinar for the dual state, the Pennsylvania, New York returns, we can redo that. Okay, so the main goal of processing and compliance is so that we do the same process every single return. We make sure that every box is filled in, every dot all your T's, cross all your I's, that kind of thing. It's important because we want clients to know what to expect every time they come into one of our offices. It gives them confidence. It gives us confidence because if you do it the same way every time, you know exactly what to do. Makes you more confident, and if you're more confident, it rubs off on the client, and everything just works better. There's just a better general feeling if everything looks the same every single time. It's just like if you went in, if you go into a restaurant and you order a hamburger, you have an expectation in mind, and if that expectation isn't met, things can get a little weird. So it's best to do things the same way every time. These are some of the things to look out for. Things that things that get missed, and the biggest one for us is, especially in Alabama, is it household income or is it Schedule C? For those of you that don't know, there's something that's called household employee income, and it's really it's put in place for things like nannies or sometimes like a maid, and this person is an employee of one family. And at the end of the year, since it's just a family, a lot of times they don't have an EIN, so they don't give them a W-2. So that's what this. That's why this is in the tax code. It is not in there for people that are, a cleaner for 5 or 10 different families. That would be self-employment. That would be a Schedule C. That's a different. You're an actual. You're your own business. You're not working for somebody else. You're not being told what to do, when to do it, that kind of thing. You're working for yourself. A household employee is somebody that works in one place for that person. They just don't get a W-2. And before you can file the return, you are supposed to exhaust all means possible to get the actual W-2. Any questions on that?
No.
Okay, so the overwhelming majority of returns where there's a question is, are they a household employee or are they self-employed? Most of them are self-employed, and the return should be a Schedule C. There should be very, very few household employee returns. And like I said, you've got to make an attempt to get the W-2 before you file the return. The next big thing is documentation. Returns that have refundable credits like Earned Income Credit, Child Tax Credit, American Opportunities Credit, and things that when you have a return, if you have a return that has like a lot of expenses or something like that, they're going to be more highly scrutinized, so it's more important for those to have documentation. You always want documentation if you can get it, but for these returns especially, you really, really, really need to have good documentation because they're going to be audited, and it just makes it life a whole lot easier if you have documentation that can back it up. And as always, anything that you use to file the return, you need to keep it. You need to keep a copy of it in their folder and preferably scan it and send it to me when you file the return. Okay, one sec. I see it. Okay, somebody asked, a home health aide for one family would be a household employee. Yes, if they don't, if the person doesn't work for another company, and they're just working for one family, and that family is basically, telling them when they need to be at work, what they need to do while they're there, that kind of thing, then yes, they're an employee for that person, and that would be a household employee. If they just decide, if they're the ones that decide when to come and go from work and what they're going to do while they're at work and buy their own supplies, that would be more of a Schedule C. But if you're basically an employee of the household, you're a household employee. Does that answer your question, I hope? Okay, here are some examples of documentation. You guys probably all know this. I'm sure the returning people I know do. I'm sure for the newer people, you've talked about it in school. Doctor records, school records for residency, for dependents, for Schedule C, receipts, credit card receipts, bank statements, even anything will work. Which brings me into my next slide. There is no magic document. It doesn't really matter what the document is that you get. It matters what the document proves. So there is no, sometimes we get caught up in, do they need a doctor's letter for the dependent? Do they need a bank statement for a Schedule C? It doesn't really matter what the document is. It just matters what it proves. There is no set in stone rule of what documentation that you need. You just need whatever you have needs to prove the claim that you're making on the return. When it's all said and done, everything needs to be to make sense to the person that's looking at the return. Because that's what the IRS is going to ask if they ever look at a return is, does this make sense? Is this reasonable? Okay, the documents that you do have should match the return. This includes client data sheets. That's a fairly common issue. If a change is made in the return, you need to reflect the change in whatever document that you're using to support the return. So what happens a lot is a client will come in, they didn't keep really good records, so they'll write some stuff down, and while you're doing the return, they'll remember something else. You'll put that in the return, but it needs to also be documented on their client data sheet. They both need to match. If the client data sheet says that they made $25,000, the return needs to say the same thing. And if you do need to change the client data sheet, if you need to scratch something out or anything like that, just have them initial. Because remember, everything that we do is supposed to be, it's for the client. We're not doing this, we're doing it for the client. So everything should be in their words and it should be their numbers. And if they don't have any really good documents for a Schedule C, just have them sit down and reconstruct everything that they can on paper. Just give them a sheet of paper and have them write down all their income and all their expenses that they can remember. And then when you put it in, it needs to match what they wrote down. So what if they don't have any documents? We have two questionnaires. We have one for residency for dependents, and we have one for Schedule C. Basically, what it is, it's sort of like just another deeper level of due diligence questions. So have them fill out all of the questions. They can't just fill out one question and sign the bottom of the paper. They need to fill out all the questions. If what they're claiming is true, it shouldn't be a problem to fill out this information. You should know what doctor your kid goes to, what school they go to. If you own a business, you should know how you get your clients, that kind of thing. Have them fill out all the questions. And then when you're done inputting the return in Phoenix, you need to also add 2 of the questions from the questionnaire into the due diligence questions in Phoenix itself. Because when we send these returns to the IRS, all they see is the due diligence questions. So if they just see the bare minimum of questions, that's more likely to raise a red flag than if you add a couple of questions on your own, showing them beforehand that you were asking questions. It just looks better, and it's better practice for us. Any questions as of now? Don't be embarrassed. Ask questions. And like I said before, when you're done with the return, does it make sense? Is it reasonable? Because this is what, if somebody's going to audit a return, this is what they're going to be asking. And keep that in mind too when you're asking your due diligence questions. Keep it in mind. Are these answers making sense? And if they don't make sense, just keep asking questions. Sometimes, maybe it could be a miscommunication or something like that, but the answers need to make sense. Now we're going to go over some things that stand out. Can you guys still hear me?
Yes, I can.
Okay, just making sure. Okay, I just did this little word jumble to show you when you're looking at a return from the outside. Sometimes when you do the return, it's hard to see it, but when for people that look at returns sort of from the outside, like for me or for the IRS, so there's things that just always stand out. It's like red letters, just like here it is on the screen. These things stand out, so every time we see this, it's going to be looked at closer. And these are just some examples in red of the things that really, really stand out. A lot of times clients will come in, and it's usually household income employees, and they'll just have like a letter that says, Betty Smith is my housekeeper, and I pay her, blah, 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 blah. And it's just a letter signed by some guy. I mean, it's sort of proof, but that's only like one piece of the puzzle. You need to have more than that, because anybody can write a letter. You know what I mean? It doesn't really prove much, but it adds to the bigger picture. If you have that along with other things, and it adds to the bigger picture, then it's definitely a good thing. Okay, now we're going to get into some of the changes. The Tax Cut and Jobs Act. These are the biggest. I went through it all, and these are some of the biggest changes that stuck out to me. Standard deduction went way up. Basically, it doubled. So what that means to us is that you're going to have a lot less Schedule A's, because you would need an awful lot of expenses to go over the standard deduction. Like for a single person, $12,000 is quite a lot of expenses. Medical expenses. The old rule, I believe, was 10%. You had to have your unreimbursed medical expenses had to be 10% of your of your income of your AGI in order for you to claim them, and that went down to 7.5%. You probably won't see a lot of these. That's quite a lot of unreimbursed expenses. Everybody has healthcare now, so you should see this less. Okay, home mortgage interest. Sometimes people will get a home equity loan, and they'll use that home equity loan to pay off credit card debt or something like that. That you cannot claim that as home mortgage interest, even though you use your home to get the loan. You didn't use it to obtain the home, and you didn't use it to fix the home, so you cannot claim it. You can only claim home mortgage interest on money that was spent to acquire the home or to renovate the home. This is pretty self-explanatory. All the old deductions that used to be subject to the 2% rule are suspended. They say it's temporary. I don't know why, because you can see here the dates. I mean, it's going to be a long time before they come back. And here are the biggest examples, and these are the most common deductions, actually. Unreimbursed employee expenses, union dues, and job-seeking expenses are the most common three that I've seen. Tax prep fees, too, for businesses. So these are no longer allowed to be claimed. That's a big change. Okay, personal and dependency exemptions. They're gone. So before, when you had a dependent, what they would do was they would exempt a certain amount of money from your income, so your AGI would go down. The way they offset this was with the standard deduction, the first slide that I showed you here. The standard deduction went way up to counteract this. So there's no more exemptions. Child tax credit went way up. You get more money for child tax credit. $1,400 of it is refundable, and the threshold for the max income went up a little bit. You also get another dependent credit. Part of the when they did away with the exemptions, people that had for example, a son, like I have an 18-year-old son that lives with me. Since they did it away with the exemption, I would get nothing. But they added this credit in, so now at least I'll get something. And there's a whole list of people that are qualified for this credit. It's not just your son or daughter. There's, nieces, nephews, everybody like that before that you could claim and get an exemption for. Now you can get this credit. They have to have a Social Security or an ITIN. Okay, head of household questions were added to the to due diligence. So if somebody's claiming head of household, there's going to be a few questions that you need to ask them about qualifying for head of household. So before, where somebody would come in and claim head of household because, I don't know, whatever, their niece lived with them or something like that, there's going to be a few questions that you would need to ask them now in order to do that. And the penalties are basically the same for this as for the earned income credit, child tax credit penalties if you don't do the due diligence. So like I said before, ask the questions and make sure the answers make sense. You don't have to, this isn't the Inquisition. You don't have to you're not a detective or anything, but you need to ask the questions. Just ask them in a friendly, conversational way, and explain to the people, this we have to ask these questions. So most people won't care. As long as they're going to get money at the end, they'll be fine with it. Here are the new earned income credit maxes. Going back to the things that stand out earlier, when you have a Schedule C return and they max out earned income credit, you're almost guaranteed an audit. So if somebody comes in with numbers that completely max out their earned income credit and they don't have any proof, you really, 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 really need to ask them a lot of questions and make 1,000% sure that what they're telling you is correct, because you're the one that's going to get penalized. Any questions so far? That's basically it. Are any of you interested in doing the GL New York City webinar over that I did the other day?
I am. I missed the first 30 minutes. I came in when you were wrapping up, basically.
Okay. Okay. Then just hang on, and after everybody else leaves, and I'll redo it for you.
Okay.
Okay, for everybody else from Alabama or that already did the GL and you're comfortable with it, that's basically it. And I'm going to end the recording of this, and we're going to redo the GL for the few people that need it. Have a good day.
Chris.
Oh, go ahead.
Chris.
Go ahead.
Hi. I'm so sorry. I was actually trying to text the question, but I didn't see where I could text my question.
Okay.
But I was going to ask you. I know they stated there's a lot of changes. The new tax law went in for 2018, but I also saw an article that said there's going to be more changes or reversal of some of these changes in 2019. I know right now we're in 2018, so don't worry about that. But have you heard about those changes or upcoming changes that's going to happen as well?
Nothing specific yet. I mean, you watch the news, right? I mean, this is a big fight. So many people don't like the changes. So many people like them. So I don't think they're going to do anything till we have a year with these new laws, so that they can see how it's going to actually work. I think that it's going to be good. I think people are going to love it. I think most of our clients, from what I can tell, are going to get more money back. So I think that it's all going to stay like this, to be honest with you. But like I said, it changes so much. It changes up to the day the tax season starts. So it's really, really hard to speculate.
Okay, and I just have one last question is, what if you do ask these questions and like you said, they don't have the documents, you're asking the questions, but you don't feel comfortable really putting in their answers? What do you do at that point as well? If it's still a little oh, I don't know if this
if it's
person
sketchy and you're not comfortable sending it, don't send it. You would have to creatively, I don't know. I don't have I'm not as good as dealing with clients as you guys are or as your managers are. But I mean, you'd have to find a way to politely tell them that you can't do it. You know what I mean? You should never, ever send a return. Or if you want, honestly, if you want, you can make me the bad guy. You can finish the return, I guess, and tell them you need to have your supervisor look at it, something like that. And I can be the bad guy and tell the client the bad news. But do not send a return if you're not comfortable, because it's your name attached to it. You understand it? So I personally would not send a return that I didn't feel completely comfortable with, and neither should you.
Okay. Gotcha. Thank you so much.
And like I said, if you need help, if you don't know what to say to the client, you can blame me and just call me and I'll talk to him myself. I'm not going to let you get yourself in trouble.
Gotcha. Okay. Thank you. Thank you.
Okay. anything else on the tax changes? Okay, give me 1 sec and we'll start the GL.